Evening, ladies and gentlemen. Welcome to Crypto Pulse Weekly, weekly digest of the happenings of the markets. Um, I think we have a very straightforward week, as it were, in terms of development. So we'll start as usual. We'll go through the weekly updates in terms of what we have on the markets. Then we'll touch on the analysis of the fundamentals and do some technical analysis as well. And then we will go through macroeconomics that I promised from last week. So I think we're in a good place to get started. Thank you once again for joining us. For those joining Instagram, if you have any question, remember to just pop up your question in the dialog box. So let's get started. Welcome everybody. I see you, Dr. Lalere, Dr. Akiade, and I think that's Pastor Kufo in KICC, please. I see you. Good evening.
Good evening, sir.
You're welcome.
So,
let's get started. Good evening, the great Wheel of Wales. You're welcome, sir. So, in terms of market updates, some interesting things this week. I was, for one, expecting the pullback this week, but we seem to have found further downside. It doesn't really change the fundamentals as far as on-chain metrics are concerned, and it's almost like we're getting calmer and calmer before the storm. And like I said last week, it's either it goes violently up or it goes violently down, but it's already been down for a significant amount of time. It only makes sense that next violent move is going to be. So, generally speaking, in terms of volatility, there's very low volatility in the markets, in the spot market, even in the futures markets. These positions are in the short positions. Very few positions are in long positions. What that then means that the market makers have more opportunity blowing up the price in terms of profit making and sinking the price. So in the futures market, what is happening is everybody is borrowing money from the exchanges to trade and bet on the price. Now, that market is largely controlled by the exchange from which you borrowed money. So if somebody is shorting the price of Bitcoin, let's say on Bitfinex for 500 million, like some people did the last few days, and somebody did for 1 billion about 3 weeks ago, what it means is the person needs to first buy or borrow that amount from the exchange, then short the price. So what it means is if the person wants to take profits off their short positions, they will need to sell that Bitcoin back into circulation by buying from the exchange. So as much as short positions tend to depress the prices significantly in the short term, it actually contributes to a price pump if anything significant happens that pushes the price. So what's been happening for practically the last 7 weeks, the people with big money will just go on the exchanges and take a short position against the price of Bitcoin. And because volatility is low, volume is low as well, the price sinks very rapidly. And that's exactly what happened since yesterday as well. However, the underlying fundamentals in terms of on-chain metrics have not changed. In fact, it's getting better and better. I'll come back to that in the course of today's discussion. In terms of regulation, there is a lot of noise in the US from the US Senate and now the Treasury Secretary talking about the Fed putting their acts together to come up with crypto regulation for the United States. Against that backdrop, I think sometimes this summer or by the end of the summer holidays, we're going to have that US Bitcoin ETF that's been stalling since basically since 2019 actually. Since 2019, they've been pushing for it. Interestingly though, in that same period, we've had Panama I think Panama, yeah. I think it was Panama, the Caribbeans, launched an ETF for Bitcoin. Canada launched an ETF for Bitcoin. And for Ethereum, in that same period, Brazil launched for ETF, an ETF for Bitcoin, and now has launched another one for Ethereum the last 1 week. So it's almost like many of the other countries are front running the US. What it means is with that time, right, the price is going to go wild. And as I would show in the on-chain metric, it's almost like we are sitting on a, what do you call it now? Ticking bomb or a time bomb. Not a matter of if, it's a matter of when the price is going to explode. You see, there's a phenomenon called contraction, volatility contraction in trading. And what it means is when price is sitting in a range. You see that a lot in stock market and the forex market and the derivatives, where a particular asset's price is sitting in a range and it's not moving. But let's like Bitcoin has been behaving now, it's moving between 30 and 35, 30 and 35. For something that would normally take moves of 20, 30, 40% in a week, you now find it vacillating between a particular range. When an asset or a commodity stays in a range for a long period of time, whenever it breaks out, the breakout is going to be huge. For this particular case, which is Bitcoin, it's, as I said, it's not a matter of if, it's a matter of when. And the reason that is because unlike many other assets that you can't see the substructure, you can see the substructure for Bitcoin. What do I mean? When you're looking at a chart, when you're looking at a trade, you're looking at what the market structure is telling you. You will have to go and get information about fundamentals to see what's happening in the real world. Then try to find out or think like the market makers to see what they're doing. But in the case of Bitcoin, it's a bit different because for Bitcoin, what is happening in the substructure is available to the public, meaning what is happening on the blockchain where the assets actually sitting. That, in essence, gives everybody, a democratized view of the asset. So regardless of what might be happening on the exchanges, what is happening on the blockchain is the true version of the fundamentals. That's what I'm trying to say. So that's in terms of what market is saying in terms of volatility and sentiment. Many countries are beginning to get into this discussion of that currency. And Japan is saying they want to intensify their regulations. But apart from that, if you were on the show last year, you remember when I said that Japan, the Bank of Japan and the Bank of the Bank of Japan, the European Central Bank, and I think the Bank of Canada were in a consortium to pilot central bank digital currency. So I think once they're done, that's supposed to have started since January. Once they're done this year, I think they'll probably be one of the first people to push that out into the markets. And once any country runs the CBDC successfully, it's just a matter of time before everybody rolls it out. Fairness, uh, most countries already have the infrastructure. What do I mean? We already have phones, we already have ATMs, we already have banking systems. So essentially, if you wanted to create a CBDC, all you have to do is to say the central bank will own the largest number of nodes, and each bank will have a node on the blockchain, or the central bank owns all the nodes, and then makes the bank users on that blockchain, and then they're able to monitor everything. So I think the basic infrastructure is already on ground. It's almost like migrating from a legacy system to another, or migrating from one version of software to another. So I think we'll start to see that in 2022. A very interesting story that I saw during the week was this very funny news about a Ukrainian bust up some illegal crypto miners. So what was happening here was that the reason they got busted up in the first place was they were stealing electricity. And of course, you can't be stealing you can't be stealing electricity to mine Bitcoin. It's too much electricity. it's just going to generate a lot of attention, regardless of where it is, except it's sitting by the power station, in which case it's not illegal. But in this particular case, this particular warehouse was illegal. And guess what? They were using PS4 to mine mine um, the mining machines were PS4. They had about maybe 34,000 or something like that. PS4 consoles that were being used, as you can see in the picture. Uh, and then, I mean, those guys are, I mean, I have to give it to them. It takes some genius of computer engineering to find a way to loop all of them together on the network and get them to do the work. Now, you will ask what's peculiar about PS4, why they're using PS4 for mining. So a normal mining rig is about 2,500 to $5,000, depending on which A6 you're buying. But PS4 is about, I mean, right now is about £250 on Amazon, or $300. It's less than $400 right now on Amazon. So it's a lot cheaper in terms of, hardware purchase cost to use PS4. But, how they manage to strum everything together and then not only strum this together, then tap the power, as you say, they stole the power. And I'm sure they'll have mined this amount before they got caught. But I mean, it's crazy. I've heard about it, but I didn't know that you could scale it up to this level. What makes PS4 attractive is that the hardware has a very fast and advanced graphic card. Now that advanced graphic card is almost like one of the things you need, hardware components for mining Bitcoin. So it works as good as if you bought a normal Bitcoin rig. I don't know who found out, but hopefully we will not have a scarcity of PS4 or PS5 in the nearest future because of it. But interesting, it's an interesting story, and that's in faraway Ukraine. Another interesting news was Bank of America launching a futures trading desk for Bitcoin. Remember what I said back in, I think that was in April. I said if the big man missed the bus is going to turn back. If the small man missed the bus, he has missed the bus. Yeah, it's either he runs to catch up or he look for another bus. But if the big man misses the bus has to turn back. As you can see, the Bitcoin bus has turned back since April because of things like this. So when you see that the price is not rising, it's not because adoption is not going on the blockchain. It's not because more people are not opening crypto accounts. It's because people like this are getting into the space and they don't want to miss the boat completely. So they want to be able to have gotten at a convenient price for them. And I mean, in fairness, 30K, anything 30K and above is still a very convenient price to have gotten it at this year, considering the fact that we started the year almost like starting the year at 20K. We got into the year above 20K, and within few days we're already at 30K and above. So getting back to the yearly low of Bitcoin in this year of adoption is a good thing for the institutions, and it's beginning to play out now why some of the market depression that we're having is happening. And as you can see, these guys are going to start trading Bitcoin futures like Chicago Mercantile Exchange and what am I saying? And Goldman Sachs that just opened theirs about 4 weeks ago, and along with the normal exchanges we have. So big money is rolling in, but they want to make sure that they are rolling in at a time that's convenient for them, and that's why they're doing everything to suppress the price. In terms of on-chain metrics, which is what is actually happening in the underlying asset itself, three things have been constant actually, or four. The exchange outflows, which is how much money is going from the blockchain to exchange wallets. So the way the exchange, the way the blockchain is set up is that most people or most of the analysts know which wallet belongs to exchanges. So for instance, everybody knows which wallet belongs to Binance, which one belongs to Bittrex, which one belongs to Coinbase or Bitstamp or KuCoin or Kraken. or Gemini, or any one of those. And the reason people know is because those wallets really have high volume of transaction because there are people sending Bitcoin between one exchange to the other, and they have high volume in terms of liquidity as well. So they're easily identifiable, and for the most part, most of the exchanges identify their wallets by themselves to say, okay, this is our wallet, especially on the Bitcoin blockchain. So one of the key metrics that tells you that the price is not probably going to go down more is one that exchange outflows has continued to go down. It went up briefly in April when we had that, big April and May when we had that big spike down. And since that time, going down again. Another interesting one is stablecoin pool. I'll talk about that in another slide, especially as relates to Binance stablecoin. The stablecoin pool has been steadily growing. I think somebody asked me that question on Twitter, and I was explaining that the implication of that is that people are banking and warehousing their money in standby mode, meaning they are waiting to be sure when the bottom has kicked in. And once everybody is sure the bottom has kicked in, the price is going to do a very crazy spike up. This is one of the reasons why the price is going to do a very crazy spike up, because you already have crazy amount of money sitting in stable coins. So any day that the price decides to take a leap up, you're going to see a lot of volume coming to the market. Another metric is new users coming into the blockchain. There is an algorithm that people like Glassnode and QuantStamp use to get unique wallets that have been created on the blockchain. And since almost 4 weeks now, 4 5 weeks, this has been going steadily. It's been rising steadily to new all-time high, meaning new users are actually acquiring Bitcoin in the background. And then there is next to nothing in terms of on-chain transfer. So it means, one, people are not selling to exchanges, people are not selling Bitcoin to themselves. The only thing that is going on is accumulation of Bitcoin from the exchanges to different wallets. And then there's low volatility as well, as I mentioned. When you have low volatility for an extended period of time, meaning the price is ranging within a very narrow range, you're going to have a breakout. And that's what all that money sitting in stablecoin is waiting for. They're waiting for the breakout so that, they can plunge in. So as I said, it's not a matter of when or if, it's a matter of when. Yeah, that other is I mentioned it last week. I don't know why I missed this one. I think I mentioned it last week about this guy's buying. This one was soft. This one I wanted to go to was SoftBank. I talked about SoftBank, I think maybe 3 or 5 weeks ago. This guy is at the biggest electronic conglomerates for banking, and they have huge investments in many payment system providers all over the world. It's a Japanese-based conglomerate, but they have global investments. And I don't know if you heard, but there was a particular company called Bullish. They're launching an exchange, and they've raised $10 billion already. So when you see news like this in a sector that the price seems to be coming down, you know then that what's happening is people are taking positions in the background. So even though on the surface the price looks like it's not going anywhere, what's happening in the background is institutions are taking very, very huge positions. My personal opinion is that this is just like the mid cycle break we had in 2013 when the price stayed down for about 3 months or thereabouts before continuing to make an all-time high. However, there are two theories. One theory is that we're going to resume the bull run and then we'll top out in December. So for people who want to cash out, end of November, December is a good time to cash out at any rate. Another theory is that it's actually the beginning of a super cycle, meaning instead of this cycle to go down, we're going to have another cycle that will run till November next year. Whatever it is, it doesn't change the fact that adoption is going to grow. So if Bitcoin goes to 500, 100, they will say it has made what? It's made a 75% drop, 75% loss. However, when you consider that year on year, it will have been like almost a 400% gain from where it started the year. So what I'm saying is definitely the market is, I mean, the bull run is not over. Like somebody asked me during the day, it's far from over at all. It's um it's a pause in the market, and that pause is likely to change either this month or sometimes between August and September. The reason being that in the global equities markets, the month of the late part of July and most of August is usually very sluggish, and that's because of summer holidays. So most of the hedge funds, they made all the money during summer. They want to splash. They go on vacation. Then when it's late August or early September, when schools are coming back, then the market seems to pick up again. I used to witness that a lot as a forex trader back then. I mean, the market would just seem like it's going to sleep during summer break. And all of a sudden, by the end of summer break, everything back to life and you see a lot of volume. So what I think is going to happen is when those guys go on break, the people who are trying to make money off things like S&P, forex, and commodities will easily shift their attention to crypto, knowing that crypto does not. So, and of course, as I said in last weekend broadcast, because El Salvador is launching in September, most of the markets will try to front run them in August. Because think about it, if a country is saying we're going to launch our legal tender as Bitcoin in a particular month, if you get in before that month, you will make money whichever way. I mean, it's just a given. Because for starters, what it means is that the country is going to shift a particular amount of its balance sheet, central bank's balance sheet, to Bitcoin, either at that time or immediately after. So there's going to be very large demand. So naturally, even whales will want to make money off that. So people will buy a lot of Bitcoin in anticipation of that. So whatever the at this time, they're very temporal. You can expect that the prices will recover in the next few months. It's not hope. It's the reality of the market. So SoftBank is also participating in bullish. Another interesting news is that of stablecoins that I said earlier. There's a 13 billion growth in stablecoins in the last 30 days. Now, the interesting thing about that is that one of them particularly notorious for this game, and that is Binance USD. For people that trade on Binance, you understand that Binance USD is a stable coin for Binance. Many people might not know it because Binance is able to provide real currency data for most trading pairs. What I mean by that is Binance is able to trade, for instance, pounds against Bitcoin or Ethereum against pounds, Ethereum against euro, and all that. So because of that, most people may not realize the import of a stable coin like Binance. But a stable coin like Binance is basically Binance's own liquidity of cash. And what it does is that it allows you to bank your profits. If you got tired when Bitcoin was 40K and decided to sell and bank some profit, you can bank it into Binance USD. And anytime you see the market, crash or dip, you can buy back at a lower price. So Binance stablecoin alone has grown by almost, what am I saying? Yeah, more than 50% in the beginning of this year. It's now about 34 billion pounds. Pounds, yeah. 34 billion pounds. Hold on a second. I have that data somewhere. No. But I think it's grown by, yeah. Yeah, I think it's grown by 34. Yeah. Binance USD. I have it somewhere. How much is this? Sorry. 3 points. Sorry, I meant 3.5 billion. So Binance USD alone is sitting at 3.5 billion, and this is about 50% gain in the last 4 weeks. I want to, I can't sort by stablecoin. But to sort by, so let's pick one USDC is one stablecoin, USDT as another. So this is Theta at 47 billion. This is USDC at 1 billion, and this is Binance at 3 billion. Generally speaking, what we're saying in that news is that stablecoins have been on the rise. And the reason they've been on the rise is people have been banking money into stablecoin, waiting for when the market to make a move so that they can jump in. Most people like to, look for the bottom. I mean, you can just be lucky to catch the bottom. Most of the time, you can't catch the exact bottom. You might catch, something close to, but usually not the exact bottom. So that's that. Another interesting news is Cardano's first DeFi project called Spros. They did an IDO 2 days ago, and they raised 2.3 million. If it goes well with Spros, then you can expect that the price of Cardano is going to pick up. Like I've always said, Cardano is a good long term, whichever way you want to look at it. They've been building like geeks, not minding what's happening in the markets. They've not really been, how do I put it now? They've not been so concerned about what we call in crypto fundamentals. But they've not been concerned about, how the market views them or what's happening with the token price. They're one project that has judiciously followed the timelines. So I respect them for that. Sorry, I think I skipped my slides. Yeah. So I respect Cardano for that, and I think this is one of the major steps that's going to start putting Cardano in people's faces. And of course, you're aware that Grayscale already has Cardano as part of their ETM trust baskets. Once they launch this DeFi and is successful, then we can expect to see a Cardano ETF in the very near term. So Cardano holders be on notice. Last week I talked about this coin. I'm sure many people are wondering what I was thinking then, but if you follow the price of Axie in the last 1 week, we have made some serious money actually, because as at that time it was just like they were just giving themselves for publicity, but in the course of this last 1 week, the price has been crazy. You can check the charts or check the price history. It's crazy for AXS. I think it's still, regardless of the fact that it's done, what am I saying? It's done almost, hold on a second, let me just check, not guess. I think it's done more than 100% in the last 1 week. Yeah. So as at this time last week, it was $14. It's done as high as 28.87, almost $29 in the last 1 week. Strong project, because it came through Binance, and Binance has a huge community. Secondly, it is NFT and gaming. So regardless of what happens in the short term with the price, so the price is going back down now to 622, which is still high, considering the fact that this time last week it was just at 14. I think it's going to go very far. Yeah, was near zero this point. Yeah, 0.1 14 cents. So I think this is the first spike. This one it didn't really pump so much here. It probably was $8, and then I think this is the first spike. And I think this is also indicative. Like I was saying, that somebody was saying whether it's going to be before that's going to launch or that's going to drive the market. I was saying that the next wave of altcoins or altcoin season is going to be driven by NFTs. and this is one of them. What do I mean? When you have price stagnation for Bitcoin over a period of time, investment will move, or there's that money flow. I keep talking about that money flow between Bitcoin and other assets. So all the money banked in Bitcoins or stable coins will start moving into other things. And those other things are usually innovative ideas that the banks and the big institutions don't have their hands on yet. So by the time those big whales and big retail traders start moving, start seeing the price jump. So by the time the price jumps, before the big hedge funds and the investors find out about it, those guys will have cashed back out either into Ethereum, into Bitcoin. Then the market will have to catch up with them. I think this is still a very good, frankly, I think it's a very, very good project. 60 million. I think it has a good prospects. It's probably going to, I mean, it's already outperformed like Engine, probably based on tokenomics. But I think it's a very good project. Along with Engine, Chiliz, I think I mentioned Chiliz at some point in the past. I think they're all very, very, very sound NFT projects, and I think they would go far. In terms of vital signs, the market has taken another hit because of the failure to thrive, as they say, because of the failure to progress in terms of. So I think what's happened is the money is leaking out of the market because people are wondering what's going on. But it's not different. It's not different from what's happened in the past. Just that number one, human beings have very short-term memories. Number two, we don't usually look back at history, apart from the fact that we have short-term memory. So we really don't take notice of what's happening or what has happened in the past. So for instance, there is a particular metric around volatility. I can't remember the name of that metric, on-chain metric, that shows that we're in a state of volatility that usually happens before a huge breakout. It happened last year before the summer blowout on DeFi. It happened at the beginning of 2013, second half of the bull run. Then it also happened when the market was at the end of the bull run. So obviously, because we have that metric, and we have other metrics showing that unlike normal end of bull run where addresses will be losing money, addresses are gaining more Bitcoin. So it's obvious that we're definitely on the verge of breakout. I don't know how high the price will go. I know, 100K is just one of short-term postulations. I think it's go a lot higher than that. And it will do so very fast, such that if you're not already in now, by the time before you say Jack Robinson, it has done 500K and back, and everybody's wondering what happened. So that's that in terms of market cap, lost some significant amount of market cap. In terms of sentiment, we're still in extreme fear, justifiably so, because some people still feel that we're still going to 2025. Regardless of where the price of Bitcoin goes, one thing you can be sure of is that it's never going to go to zero, ever. The reason being that the network has outgrown what you can call a 50% critical threshold. You see, in the lifetime or in the lifespan of the life cycle of a blockchain has to outgrow a point where you can't hack it. Now, the only way you can hack a blockchain is an attack. And what you do in that sense is that you clone the blockchain, then you derail the transactions on that blockchain into your own version of the blockchain. Collect as much money as you want, then set the rail back. It's like I can't remember that movie. There's a particular movie like that they stole something like that, just the way I described it. When they derailed the track, collected the gold or something, then put it back, and we joined the track with empty coaches. But really, that's the only significant threat to any blockchain network. And Bitcoin Ethereum had that when the Ethereum Classic was hacked, and then they forked Ethereum Classic into Ethereum. But the only time we tried it was when Bitcoin was trying to migrate from the original Bitcoin to the current one, which is the SegWit, which is the Bitcoin network we're using now. And some people wanted to stay on the old one. That's why you have Bitcoin SB. Unfortunately for them, what has then happened is since then, Bitcoin SB has been hacked more than 3 times. But still hacked it last week. So if you don't have that kind of risk, which for you to carry out now, you will need electricity that more than that's that powers probably Italy or Switzerland. And you need it for almost 8 months to be able to do that successfully. It's almost impossible. I mean, literally impossible at this point. So that's the only risk Bitcoin has. And so with that, and with hash rates, oh, I didn't forget to mention hash rate. So hash rate is the processing speed of transaction based on mining power. You recall that 2 or 3 weeks ago, there was a lot of noise about China phasing out all the Bitcoin miners and all that. And in 3 weeks, actually, in this last 1 week, hash rate has grown by 30% in the last 1 week. So it means that those guys have either rapidly migrated out of China or other people are taking their places. I don't know. The hash rate has gone up. So hash rate is no longer a problem. So all the things that were supposed to have constituted uncertainty are already out of the way. So for me, in this market cycle, I think we are here. We are here now. We are both. A lot of people think we're at capitulation and this is the end of the market and we're going to go sideways. Yes, in the short term, it looks like we're going sideways, but in the mega trend itself, which is this bull run, we're still way between hope and optimism. And the only thing that needs to happen, I think probably in the next 1 or 2 weeks, you start seeing some interesting news. All of a sudden, you see that the sentiment will switch. The only thing then it will be too late to buy because the price will be climbing like crazy. And it will not make sense. And I've said it before. It looked like maybe some of us we don't know what we're saying. But when you see the way the price is going to blow out, it will not make sense. You can quote my words in 3 months, it will not make sense. You look at your screen and you will see Bitcoin at 200K and you're like, how? But definitely you can know that before this year ends, definitely Bitcoin is going to definitely be selling over 100K. Definitely. So whatever you're holding in your hands now depends on you. You want to cash out, just wait to 90K, 100K cash out. And don't regret. Because if you then takes a plunge to 500K, sorry, nosedive up to 500K, then you just have to live with it. But it was enough for the wise. I'm not going to say more than that on the price of Bitcoin because so many people have asked me about it. In terms of technical analysis, just a few things I'm going to talk about, and I'm going to refer to it again in the macro. So for Bitcoin, we've more or less been in a downtrend since almost this. Since the 9th of May, 9th or 10th. Since the 10th of May. And we've had 2 attempts, no more than 2 attempts actually, for the market to recover. But we've had very poor recovery. So when we initially dropped to 31K, let me switch it to daily chart to make more sense. We initially dropped, so let's pick from here. So the peak was in April when we went 65K. But before that peak, we have stayed in the range of 58, 55 for a while before attempting that peak. Once we attempted the peak, the price dipped to 51, then dipped further again to 46. Then, it quickly got bought up. They went back into this long-term trend line. This trend line, by the way, came from September last year. This one going all the way down. If I zoom out to the weekly, you see that it came from September last year. I've deleted it now. So that trend line got broken, and once the trend line got broken, once the trend line got broken, we basically started trending down then. Now we've tried to break this a number of times. We tried this short term, we broke this short term up, but we didn't quite break this long-term trend. And now we've been sitting along this long-term trend for the last 1, 2, 3, 4, 5, 6, 7 days. We've broken down, and it's almost like we're sliding down on it. Two things to watch out for. And I think I mentioned this at the end of last month. And what I was saying then was this peak red line is the 12 months moving average for the price of Bitcoin. The reason it's very significant is that rarely do you find the price knuckling around 12 months moving average. I will explain what I mean. I mean, since the beginning of calculation. Let me change to logarithmic scale. No, it's not nice. Oh, come on. Equals to 0. Yeah. Yeah, let me. So here's what I'm saying. The only times we really had things, the 12-month moving average getting calculated on the price of Bitcoin. The only times we've been sitting below it has been in the bear markets, complete bear markets of 2018, and when the price dipped in 2020 during COVID. Those are the only times that the price has sat below this 12-month moving average. And essentially since April 2020, we've moved away from it progressively up until May this year, when the market started attempting to break it. I did say then that the market didn't succeed in breaking it in the month of May, and the market didn't succeed in breaking in the month of June. I doubt that it's going to succeed in the month of July. The reason being, we're still we're still in the middle of the month of July. This moving average is 20. Sorry, I've changed the calibration. But it's at 32. Yeah, it's at 32,900 now, and the market is currently at 31,000. So what that means that when the market is going to close at the end of this month, I doubt that it will be at 31. Obvious reasons. We've been in consolidation for a long time. The reason we are sitting at this price is because of short positions. Short positions cannot hold for longer time. You can't be in a short position for long. That's why it's called short. Because one, if the market goes against you, you need to release all your shorts to exit your position, which means you need to buy Bitcoin to exit your position. Two, if the short positions are dominating the markets, then you will need to be paying the exchanges to hold that short position. So right now, if you're in the futures markets and you're holding short position, long positions, the market is going to be paying you a fraction for the position you're holding, because most leverage traders are sitting in long positions, in short positions right now. So because of that, long positions are getting paid, short positions are being taxed. Let me use that word. So people holding short positions, who are the guys pushing down the market, they can't hold for long, simply because it doesn't pay them. So let me show you what I mean. There's an index called BTC. Here's the shorts. And the good thing about this index, it tells you, you can immediately see the people who are troubling the markets. So if you correlate these jumps, so each green that you see there are huge short positions. When you correlate those short positions with the price of Bitcoin, you find out that every time you see this on the daily chart, anytime you see this huge long short, the price of Bitcoin is going to come down. Now, they tried it again in the last 6-7 days, and that's why the price of Bitcoin has been stalling. You can see the beginning to exit those positions, and that's why coming down now. In a few hours or in a few days' time, you see that these short positions are down, because they can't hold the short positions forever. At the most, this one, this one was the one I was talking about the other time. I said somebody opened for $1 billion. These ones are really like 500, 400, $100 billion shorts. But what I'm saying is, because the short position itself is like a leverage position, meaning you are living on borrowed money. So for you to profit from that position, the market needs to go in your direction. The market does not succeed in going your direction, then you need to exit your position. You'll be paying the exchange. You will be at a loss for the money you put down to short the market. I think I'll have to explain that another time, but really that's how shorting works. So the people that are short hope to push down the price, temporary gains, and then sell back into the market. So the reason why the price of Bitcoin has refused to go down, so let me go to now. The price at last year, the price bounced up 31,000 and it's gone back up because those holding the shorts are now having to short. So that's that in terms of what's happening. What I wanted to talk about today was macroeconomics in terms of crypto, the macroeconomics of what's happening, what affects macros that affects the price of Bitcoin by extension the cryptocurrency markets. One of the first things to look out for when considering environmental variables that affect the price of Bitcoin is to look at the US economy. Why? The US economy is the world's money printer. Put it simply, those are the guys responsible for money supply. Even though we have Bitcoin, we have cryptocurrencies. In today's world, they're still calibrated in fiat currencies. So if you want to know how much something is worth, you still have to use the reference currency for the world, which is US dollars. So because of that, anything that affects the US dollar has an indirect impact on the price of Bitcoin and the cryptocurrency markets. So for instance, when COVID hit in March last year, and everybody was in confusion and everybody was rushing for money or rushing for cash, even though the market was crashing, what was immediately obvious was that people were rushing to the US because that was cash, and people wanted to have cash as much as possible. But immediately after that initial shock, what then happened is people started running from cash to safe havens. Then we found out that things like gold, like Bitcoin, and later the S&P 500 started regaining from the initial shock. And within 6 weeks, Bitcoin had recovered even faster than gold at that point in time. So you cannot disparage the US dollar in today's crypto economy because the world is still spending US dollar. Let's be factual with ourselves. The only reason why everybody is looking at crypto is because the US dollar is increasing its circulating supply. If you know anything about crypto, you know that the more circulating supply something has, the less the value it has. And in the last 1 year, US has increased their circulating supply by 25%. It printed 25% of the total amount of US dollars that has ever been printed. So if US dollar was 100 trillion or 500 trillion before March 2020, what we're saying is that by March 2021, the US economy has added at least, let's say 400. Let's say it was 400 trillion. The US economy has added at least 100 trillion in addition to the existing 100 trillion. That is how much dilution has happened to this dollar. What that means in clear terms, and I keep saying this because It doesn't register well for so many people because people don't understand. What it means essentially is that if you had 100K in your bank account at the beginning of last year, right now, that 100K worth 75K. How do I know? Very easy. Go to the restaurants now and try to buy stuff. Even, Tesco. You find out that even the cheapest of things is beginning to add 10p there, 5p there, £1 there. Everything is beginning to get pricier because there's inflation. Why is there inflation? Money supply. There's more money in circulation, meaning it's going to take more money for you to acquire anything than it took for you to do the same thing last year or 2 years ago. Unfortunately, this is not going to stop because no politician wants to be responsible for, breaking the world economy. So the only workable short-term solution is to print more money. Because you print more money, everybody's happy. It's almost like giving everybody what they call Kool-Aid in the US, or giving people cannabis to make them high so that they can forget their sorrows. So what they are doing is they're injecting the economy with cannabis or steroids so that the economy will feel good and people. But what is really happening is that the world economy is collapsing. And the only way to fix it in the short term is to print more money. So as the US prints more money and say we're doing quantitative easing or bonus package, they have all sorts of fancy names. What is actually happening? And as they're increasing the supply of the US dollar, they are devaluing your net worth. If you are holding your net worth in US dollars, I've said this before. If your net worth was $100,000, your net worth now in true value now $75,000 between last year and this year, because the US dollar has increased circulating supply by 25%. So the reason why US dollar will always affect Bitcoin, whether we like it or not, because everybody is spending US dollar, and even the Bitcoin that we're buying it with, fiat currencies. So having said that, in terms of crypto macro, one of the things that we usually need to watch out for is an index called the US dollar currency index. Now, currency index started way back in the 1980s. And the way it was working was that it's supposed to calculate the performance of the US dollar against most of its trading partners. And when it started out, it was somewhere around 129%, meaning that US economy was 20 times better than the collection of its trading partners. That includes most of the G7 and G20 countries. I think it's about 12 of them in this index. But this index is so strong and powerful. Over time, how the economy of the US has fared and how the US dollar has fared by direct extension. So you can see we had this peak around the 2001, 2000, which was the dot-com era. So that boom started from around here, actually, around 99. Tech boom. I went all the way to, and then there was economic decline that went as far as 2006. Then, of course, 2008 crash. You can see all these red months. And now, before 2021, we've literally been in a downward slope, actually since April. Since April, May 2020, that's the last climbing down. And the reason taking this decline, I said, is because a lot of money printing happened from March last year, essentially, as an intervention of the US government into the world economy. Because what they saw or what they think is that if they don't intervene and allow everything to go to bust, there'll be anarchy. There'll be riots in the streets where people can't eat and they're not, so to forestall that and to just maintain the status quo, it's very easy. It's is at the click of a button, they'll just print more money. So now printed more money, and that's why we've had that decline. Now, since I would say February, when what's this guy? Joe Biden came in and they started implementing all those short-term measures and all that. I see that went back up like this 12-month moving average. But it's come down again because of one, because of Delta variant, two, because of the uncertainty around the impact of this Delta variant around the US economy. So as long as this guy is going up, the long and short of my story, as long as this guy is going up, let me switch to weekly. Bitcoin is likely to weaken. But I mean, knowing what I know, I think this is just going to be this is a lower high already in terms of decline. This attempt to break this 12 months moving average has not been successful in the last 2 weeks. I don't think it will be successful this week, even though it's currently above it. I think it's going to dip back further by the beginning of next week. And if that happens, it means that the DXY is going to start coming down again. When that happens, automatically you see the effect in the price of Bitcoin, because institutional traders, hedge funds, large cap multinationals are looking at the DXY as an index of how they position themselves on the global forex markets and actually by extension on the S&P 500. So usually when this is coming down, you can expect that the price of Bitcoin start going up. And another one that's of significant importance is, of course, the S&P. Most people are aware of what the S&P is. The S&P 500 is the US stock market, and it's a pretty much good indicator of how companies are behaving within the US, especially the stock of those companies. Right now, it's trading at extreme high, and even at that, it's only just done 35%. It's big. So yeah, since the beginning of the year, it's not 35% from the beginning of the year. I think it's going to come down at some point in time. I don't know when, but just like Bitcoin was trading on the edge of Bollinger Band for a long time, it's going to come down and retest the median. It might be immediate, it might be later in the year, it might be in 2022, but it's not sustainable. Let me use that one. You can't be trading on the upper edge of some of that. It can continue for many months, get me wrong. Broke down to then continue again. So can continue and break down into the median at some point. But the median is so far away. So it's at 4,000 now. The median is at 3,000. It's so far away from current price. These indices do affect the price of Bitcoin significantly. And the reason is very straightforward. For the US dollar, I've already told you. If the US dollar is crashing, and people know that it's crashing by reason of inflation, investors look haven for their cash. They will come to things like Bitcoin or their funds. On the other hand, if government bonds, that's the one I left out. If government bonds are performing fairly well, maybe there's a slight increase in interest, because those ones are like the government is going to print money to give you interest, so it's almost guaranteed. So US government bonds is performing well as well, you will see the effect of the price of Bitcoin. So those are the major macro do affect the price of Bitcoin. They always affect the price of Bitcoin. And the one for the stock market, just to explain, the reason the stock market price affects the price of Bitcoin is that many of the institutional traders that are involved in the stock market, like Dow Jones, S&P, and all that, many of them have leveraged positions in the stock market. So if the stock market is suddenly crashing, for them to cover their position, what I mean by cover their position is if you bought, let's say you bought a particular stock, let's say you bought Tesla, I don't know how much Tesla is selling now. Let's say Tesla was selling at 1,005, and then Tesla started crashing to like 1,000 or like 700. If you are leveraged in that position, you need to add to your position, meaning you need to add more money to your balance. Your broker locks you out and wipes out your money. For you not to lose that trade, meaning for you to retain your equity and not lose money, add to your balance. If you don't add to your balance, your leverage position is eventually going to wipe you out on that trade, take you out at stop loss. So what they do for most of them is, because most of them too don't use stop, by the way, what they do is they just dollar cost average. They pull money from other sources and push it into that position to support the downward spiral till the shock is over. Then when the price goes back up, they exit at profit. So to do that, what they usually do is they have a hedge in cryptocurrencies. So they buy Bitcoins, for instance, and use it as a hedge against the market. So when stock prices are crashing, you suddenly see Bitcoin prices crashing. The reason it's crashing is not because the stock is affecting itself. It's just because most of those guys have concomitant positions in both stock and crypto. And because crypto will not crash normally, so immediately the stock price starts coming down, they just liquidate their, push the money into the stock positions so that they're able to buffer the shock. And then we start the drawdown and then sell it at a profit. So right now, S&P 500 is DXY still going great. So if DXY turns, which is likely to, let me switch to, which is likely to in the next 1 or 2 days, once it turns back and is not able to break this red line, then we're going to start seeing, definitely we're going to start seeing some increase in the price of Bitcoin, because the price of Bitcoin, as I said, is sensitive to the S&P, which is the stock market, sensitive to the DXY, and sensitive to the government bonds, US government bonds. So that's what I wanted to talk about today in terms of, oh yeah, I think I'm fairly good on time, in terms of the market affecting price of Bitcoin. Also, I'm worried about the Bitcoin position. As I said, you don't need to look at your portfolio for now. It's going to make you sad. So don't make yourself sad, nothing. It's a temporary drawdown. You have not lost money, sell. So if you don't sell, you've not lost money. And like I said today, the WhatsApp group, time in the market is greater than money in the market. And I'm sure many people wanted to ask, what does that mean? But decided to keep quiet. But I will explain what it means now. Again, time in the market is greater than money in the market. So if I had $1,000 and I put that $1,000 into Bitcoin at the beginning of January 2020, just follow me. January 2020 is where is January 2020? Let me just go to weekly. I want to demonstrate something to explain that statement. Time in the market is greater than money in the market. So if in the first week of January 2020, I decide that, so this is January 2020, right? Yeah. So this week, when the price of Bitcoin was 7,000, so essentially we opened the year at $7,361. So I said, let's say I bought Bitcoin of $750, which is 0.1 Bitcoin. Just follow my logic. I bought 0.1 Bitcoin worth of Bitcoin, which is $736 at the beginning of 2020. What I'm saying, that time in the market is worth more than money in the market, is that if at the peak that we've had so far in 2020, 2021, which is this the peak we've had so far. If at the peak that we've had so far, I decided to sell that 0.1, which was $736. Let's even say I didn't catch the peak. Let's say, I decided to sell here at 60,000. My 0.1 now is $6,000. When I bought it, it costed me 736. That's almost how much now? Almost 10 times the amount I invested. Now, if my money in the market was No, let's say my money in the market. If my money in the market was 10,000 on the other hand, and I only got in here when the price was 57,000. If I sold at the same time with that guy, I would have not made as much money as the guy who has stayed in the market for that long period of time. So the meaning of time in the market, the longer you stay in the market, through bull and bear cycles, the more so for your money gains value. It's not like your money is gaining value, the real sense of it. Just that money is devaluing itself over time. Sorry to screw with your mind a bit, but that's actually what's happening. So it's in the same way when we buy real estate, buy properties or landed property, what we're doing is that we're buying, it's almost like we're trying to buy a stable coin. We're buying something that we know that is not going to depreciate like currency. So what then happens is as the years goes by, currency depreciates, so governments continue spring, that property appreciates because buying power generally reduces currency. That property appreciates in value because the buying power is reduced. So in the same way, somebody who stayed in the market, so that was beginning of last year. If the guy was now at, let's say 2018, December 2018, when the price of Bitcoin was 3,260, and now decides to sell in April this year, that's 20 times the value of the original money invested. So the reason I say this is because, of course, I know people who are the group who've been investors since the beginning of the year, and who have been investors since last year. You need to understand that your time in the market is more valuable than the amount of money you put in there. Because the longer it goes, the bigger it becomes. And people talk about how do they say it now? Talk about beer and they say beer and bull run. But when I want to scale this thing so that we see something. When you scale, so this is the chart of Bitcoin weekly. When you scale this over a logarithmic scale, let me remove this. It's messing up my. Yes. When you scale this over, I don't know how to do that thing again. And I did, and okay, I used to know how to do it. I don't. Index 200, yeah. Logarithmic. Okay, there's a combination I actually wanted to do. I can't figure out how to do it now. But basically, you see, that combination allows me to stretch out. I don't know what to do index 200. I need to find that out. That combination allows me to stretch out the price of Bitcoin from the very beginning without spreading it too thin. I can't remember that. So apologies, I can't remember the settings. But there's a particular settings that actually allows you to see the full length of the price from the very beginning. I tried to save it as a template, but I think I lost that template. So ordinarily it will have allowed me to stretch this chart so I can see the price, because I don't want to show negative integers. Because then it will have been very easy for me to show you that this price really is actually still sitting in a giant, like a giant massive bull trend running. I think I'll try to do it again next week and show. I'll take a screenshot and show you that actually that's what I should have done. The day I succeeded in doing it, I saw it somewhere, so I was like, okay, I should be able to do this on my chart. So I succeeded in doing it, but I didn't save it. I will have just shown you that. But what that particular chart will show you is that you see that we're actually one big giant uptrend with peaks and troughs. And what that tells you is that the longer you stay in the market, the more valuable your position becomes. And I'm giving you the example about, from last year. But think about this. When Binance was launching, I think I've given you this example before. When Binance was launching, they started as an airdrop. They were giving people the tokens for free. They were giving people 100 for free. Imagine 100 BNB for free. So people took the 100 and decided to buy more. I know of a person that decided to buy, I can't remember how much he spent, but at that time, he bought about 50,000 more units of BNB. And the guy says, well, he's not going to sell until BNB is $500. Or even if he doesn't sell at 500, even if he sells at $100, 50,000 BNB is a lot of money today. So what I'm saying to you is because we're at the early stages of general adoption and the evolution of this technology, whatever you have in the markets is going to grow in exponential proportions over the coming years, regardless of how many years bull run or how many years bear run we have in between. It's going to grow exponentially over the coming years. Now, I've said to people, for people who are looking to cash out, you can take out your initial capital or take out your profit, whichever one you want to, before the end of the year. But know that money in the market or time in the market is greater than money in the market. Meaning, the longer your money stays in an evolving market, the more valuable it becomes, the more pricey it becomes. And I've explained it to you with those two examples. Somebody that bought Bitcoin at the beginning of last year for 7,000, and somebody that bought this year. Anybody that bought last year, this sell throughout last year, at the peak, even right now, at 7,000, we're more than 4x, even considering the current drawdown. Now, by the time Bitcoin is doing 90,000, 100,000 towards the end of the year, that person already has more than, more than 10x within a space of 24 months. So the longer your tokens are, especially where, they are, good technology use case tokens, the longer they are in the market, the wealthier you become. Let me use that word. So regardless of what the price is saying today, it's irrelevant because at the end of the day, we're in a mega giant uptrend that's still unfolding. And like somebody said, this particular bull run is probably going to be the biggest of them all, because this is the bull run in which the institutions get to join blown without any caps and without any disguise. So it might be a bumpy ride, but it's going to be a very jolly ride before the end of the year. Definitely before the end of summer, we'll start seeing some fireworks. So I think I've overshot my time now. I'll take questions. If anybody has questions before we call it a date. If you have a question on Instagram, just type it in. I'll read it out and answer.
Good evening, Dr. Demi.
Good evening, Dr. Ali. How are you, sir?
I'm fine. Thank you very much for another insightful session. I wouldn't know, maybe in the nearest future, if we can just visit. I think probably we have visited it in one of the sessions, how to use the P2P stuff to sell and buy crypto on Binance.
Yeah, we've done that before, actually.
Yeah,
I can do it again.
Okay. Maybe in one of the sessions.
Yeah, I'll try and do it again next week.
All right, sir. Thank you.
No problems.
Yes.
I have a question on the chat. Clear Junction just returned my funds to Halifax. Oh, okay. Okay, so let me explain what's happening right now. There is I don't want to call it a conspiracy, but there's a collaboration in the UK against crypto from the banks, and it's, at least I know of HSBC. I didn't know Halifax was part of it, I know of HSBC, I know of Lloyds, I know of Santander, I know of PSB, saying they were not going to allow people to send money to Binance anymore. And that was actually the next thing I was going to say, that you might have noticed, the United Kingdom and a user of Binance, you might have noticed that the opportunity to withdraw to send money via the GBP channel has been suspended. And the reason it's been suspended is there's just been this barrage of assaults from the banks to Binance. And the backdrop is against what FCA says. And the funny thing is that what FCA is saying is different from what the bank is saying, which is a very funny thing. But I understand the pains of the bank. Binance has literally sucked the life out of the bank's deposits for this year, because most people are buying crypto instead of keeping the money in the bank. So it was almost like they just piggybacked on the FCA announcement and just decided to block, or what do they call it? What council? They decided to cancel Binance. Yeah, that's the word. So what's happening is that they're all trying to block Binance from getting on-ramp and off-ramp to crypto. I think it's transient. I think it will resolve after a while, because what will then happen is people will then go into what I call underground economy, just like the same thing that happened in Nigeria. For context, what happened in Nigeria was CBN came out and said, we're going to block the bank from taking exchanges money. And what then happened is Binance opened up its P2P portal and sort of upgraded it. Then people just automatically migrated to the P2P portal, created an alternate economy where you can cash out your crypto or buy crypto without the knowledge of the bank and without the coverage of CBN. So the government literally lost the opportunity to tax anybody or the bank, or any revenue that the bank will have made from some such transactions was gone. Because what it then means was that they will have been able to levy the exchange, in this case Binance, sending the money to the bank. They will have been able to levy the bank as well, collecting charges from them. But what happened is people just went full pay to pay, meaning if I want to send money, I go on the Binance portal. I'll show you next week how to do it. I go on the Binance portal, I look for somebody who is willing to buy, and I'll see the person's price and how much they want to sell, and the payment terms, the payment method, which will be bank transfer, Skrill, PayPal. It could be anything. And then once we agree, once I make the transaction on my Binance, the person will be notified through a workflow. Then the person will have to make the transfer either physically through, faster payment in the case of US, or bank transfer in the case of Nigeria, or Kuda Bank. I think there's a Kuda Bank they use in Nigeria, or Cash App, or Skrill, or anything, or PayPal. Once I confirm that the payment has come through, the person gets the money in their Binance account, and that's it. Completely circumventing the bank, circumventing the regulation. So that's exactly what's going to happen in the UK. But it's not really that bad in the UK yet, because you still have what's it called, apps like Swissborg. So if you want to download Swissborg app, I'll send you the link on the WhatsApp group. You download Swissborg app and you're in the UK, they'll even give you, I think, maybe €5, €10 in Bitcoins for signing up to somebody. So Swissborg is an EU registered UK operating app. But because it doesn't bear any crypto name, most of them don't know it yet. So they are still operating fine. You can withdraw, you can transfer directly through the app. Or if you need to buy crypto, you can just do it through P2P, or you can do it to crypto.com. Crypto.com too is still operating below the radar because it don't have the volume Binance does have. I have a crypto.com card, but if I really need cash, like I can get cash. I just take my card to the ATM and withdraw. Mr. Wali, you have something you want to say?
Yeah, I was just going to say that the Swissborg something works very, very well, because when I use your link, I think it gave me maybe 80 euro, or something close to 80 euro Bitcoin. So
yeah, it actually gives I'll send you the link, Pastor Kufu, I'll send you the link after, and I'll also post the link on the WhatsApp group. And because they're a smaller entity, the banks don't know them, so they don't have their beef against them. There's a lot of beef against Binance because when you compare the market capitalization of Binance, I mean, it completely wipes out the entire market capitalization of Coinbase with change, actually. And this is not a publicly quoted company. So there's a lot of anger from the banks because apparently most people are not keeping their money in their account anymore. They're moving it to Binance. So what FCA said was Binance cannot use their UK entity to trade derivatives. In line with what FCA already said for everybody else, December and January this year, that derivatives are not allowed to be sold to UK customers. They didn't say they were going to block Binance, but of course, because the banks already already pent up in beef against Binance. They just, in fact, I think I sent that one that Barclays was sending to people. They will send that we can't carry out your transaction because blah 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 blah. They're protecting you from losing money. Meanwhile, these same stupid guys are not protecting you from sending money to Ladbrokes. You want to gamble. You want to better your life, they're protecting from losing money. I'll send for people in UK, I'll send you the system. And next week I think I'll try to explain how the P2P works so that people can understand how to use the P2P. We want to use P2P I'll use Nigeria as an example, but it works the same way for UK. Just select your currency, select what you want. So usually you have, let's say, in the case of Nigeria, I have USDT that I want to convert because Nigeria really transacts in dollars. I have USDT that I want to sell to Naira. So because I've already stated on my Binance platform that Naira, that my payment method is my bank account, my GT bank account. What then happens if I want to send money over? I just go to Binance and buy USDT or send you about any crypto to USDT. Send the USDT to P2P, then look for anybody that has a favorable rate. Select the person, select how much I want to sell, click on the person's sell button. Person gets notified. Then the person has a few minutes, maybe 15 minutes to 1 hour, to make the transaction. Once they're done on their own end, click done. It sends me a notification that they're done. Then I'll wait till I see the alert in my phone app. As I get the alert in my phone app, I authorize it as complete. Binance sends them the USDT from my account. Transaction closed. As simple as that. Any other question before we call it today? Okay. Thank you very much, everyone. Have a lovely weekend and see you again next week. God bless.
Doctor, good evening. This is just one last thing. The exchanges, the way Binance is being hunted for this thing, do they have physical offices in those locations?
I've explained this concept that Binance operates before. So Binance operates what you call holding company structure, meaning that in many of the places that Binance has clients, Binance has a legal entity, meaning they have a company there. Now that legal entity is different from Binance.com. They're not Binance.com. Binance.com is registered in Georgia. It doesn't have a physical entity there. So nobody can go and harass them and chase them out, if you will. So because they have their holding company in a location that's number one, it's not they don't have tax restrictions, so they're not subject to company tax there. Secondly, they don't have a physical location. It's not like they keep their servers there or their offices there. The only physical locations they have are in those representative companies that they have in country. So for instance, Binance US, which is a US company, has office in the US. It is a separate legal entity, Binance.com. Binance UK, which is called Binance Markets, again, separate legal entity from Binance.com. That one has office in UK. Binance Arabic, separate legal entity from Binance.com. Binance Turkey, same thing. Binance Hong Kong, same thing. So no matter how much noise anybody's making, the noise will only be getting to the local entity that and those local entities they're just like shops, if you will. They don't have any power, really and truly. The real Binance company is virtual, to be honest. So no matter how much noise they're making, they're not able to hold them because of the way they've structured that. And what I think is actually giving them the hits, apart from this FCA, was the fact that they were attempting to launch. So no, not they were attempting to. They actually started launching stock tokens, meaning you could trade the price of some particular stock as representative tokens of Binance. And I think that got them into regulatory waters with many countries. So now I see that they've stopped it. There's a news out today that they've stopped it indefinitely, suspended indefinitely. They're probably not going to do it again for the near future. What I think will happen is for each of those representative Binance exchanges like Binance UK or Binance US or Binance Turkey, they will probably need to go and get the license to do it in each of those jurisdictions. So there's nothing they can do with them. I mean, nobody even knows where CC lives or where he is. Everybody just knows that he shows up on Twitter every day. So no matter how much noise they're making about Binance, that structure, and I've been saying it for a long time, that structure is a very genius structure. It doesn't, it makes them completely you can't catch them. Let me use that word. You can't catch them. No matter what anybody is saying, you can't do anything to them, really. So there's nothing to worry about. Albert.
Okay. Thank you very much, Doc.